Rajashekar classes. This is lecture number 20. In this lecture, we will try to understand what is fundamental analysis of stocks. Before understanding fundamental analysis, let us try to understand what is intrinsic value of a stock. The intrinsic value of a stock is an estimate of its true worth based on fundamental analysis rather than its current market price. What is the use of this intrinsic value? Intrinsic value helps investors to determine if stock is overvalued or undervalued or fairly priced in the market. It provides basis for making informed investment decisions, highlights long-term value over short-term market fluctuations. If a stock's intrinsic value is calculated to be $50 and it's trading at $40, it may be considered undervalued and a potential to buy. Conversely, if stock is trading at $60, it might be overvalued. Understanding intrinsic value is key for value investors like Warren Buffett, who focuses on finding stocks trading below their true worth. What is fundamental analysis? Fundamental analysis is a method used to evaluate the intrinsic value of a stock by examining related economic, financial and other qualitative and quantitative factors. The goal is to determine whether a stock is overvalued or undervalued by assessing the underlying financial health and growth potential of the company. What are the key components of fundamental analysis? First one is qualitative factors, second one is quantitative factors, third one is macroeconomic factors, fourth one is valuation technique. Valuation techniques, let's try to understand one by one. What is the first one? First one is qualitative factors. What is qualitative factors? First one is business model. How the company operates and generates revenue. This comes under business model. Industry analysis. Position of the company within its industry. Management. The leadership and decision making capabilities of the company's executives. That comes under management. Business model, industry analysis, management comes under qualitative factors. Now let us try to understand second one, that is quantitative factors. What are the quantitative factors? Financial statements, balance sheets, income statements and cash flow statements comes under financial statements. Key ratios. We will try to understand all these key ratios in detailed manner in future classes. For example, price to earnings, P by E, price to book, P by B, debt to equity, return on equity, ROE, extra. All this comes under key ratios and revenue and earning growth. What is this revenue and earning growth? It indicates trends over time, dividends, stability and growth of dividend payouts. We will try to understand all these things, financial statements, key ratios, revenue and earning growth, dividends. These comes under quantitative factors. We will try to understand all these things in detailed manner in future classes. What is third one? Third one is macroeconomic factors, in which first one is economic indicators. What are the economic indicators? GDP, inflation and interest rates. What is this? Market trends. It also comes under macroeconomic factors. Market trends means sector performance and industry dynamics. Fourth one, that is last one, is valuation techniques. First valuation technique is DCF, discounted cash flow analysis. We will discuss this one in future classes. Comparable company analysis. This also I will discuss. Asset valuation. All these three concepts we will discuss in future classes. Time being, just understand all this comes under valuation techniques. Fundamental analysis is typically used for long-term investment strategies aiming to identify stocks with strong growth or income potential. potential. Thank you very much.